Let's take a look at wellness programs. Many employers, especially larger ones, have turned to wellness programs as means of lowering health insurance costs by improving employee health. Wellness programs vary widely in comprehensiveness, beginning with programs that merely dispense information or offer opportunities for physical activity or provide health screenings. Others provide incentives or penalties based on achievement of specified health outcomes or focus on actively managing expensive and potentially debilitating chronic diseases. Participation in wellness programs tends to be low in the absence of incentives or penalties, lower or higher health insurance premiums. So, those are common program features. Wellness programs frequently include periodic surveys of employees, known as health risk assessments, and screenings for the likes of high blood pressure, cholesterol, and blood sugar. Despite their potential to be mutually beneficial to employees and employers, wellness programs are controversial. Several federal laws converge around wellness programs. Wellness programs that base rewards or penalties on standards related to health factors, they can violate the HIPAA or ACA nondiscrimination requirements if employees are charged more for their health insurance coverage. Under these laws, it's important that plans be reasonably designed, which includes offering annual opportunities for incentives, providing reasonable alternative standards, not requiring participation as a condition of coverage, and limiting the size of incentives or penalties. Wellness programs also raise questions under the ADA and GINA. Disabled employees are more likely to have difficulty meeting health-related standards required to earn incentives or avoid penalty. More generally, the health-related information gathered through health risk assessments or screening is not job-related and consistent with business necessity. The EEOC has issued guidelines for wellness programs that correspond to HIPAA and the ACA requirements, but do not limit to outcome-based programs that tie incentives or penalties to meeting health standards. The EEOC's requirements include not imposing a burdensome time commitment or cost, refraining from overly intrusive inquiries, and not denying coverage for employees who choose not to participate. Further, notifying employees about which information will be collected, used, and stored, and not imposing penalties exceeding 30% of cost. Because health risk assessments inquire into family history, the GINA Wellness Program rules are mostly the same as for the ADA, although GINA requires employees' signed authorization rather than simply notice to employees. The EEOC's new guidelines on wellness programs have already been challenged, and a court has ordered the agency to reconsider its guidelines. Congress is debating legislation, and courts are deciding cases on varying grounds. Finally, the Pregnancy Discrimination Act has implications for health plans. The basic principle of the PDA is that pregnant employees are entitled to the same treatment as non-pregnant employees with similar ability to work. Health plans must cover expenses for pregnancy-related medical care on the same basis as expenses for other medical conditions. An exception is that health plans can refuse to pay for the cost of abortions where the life of the mother is not endangered. Not only must pregnancy-related medical costs be covered, but health plans are prohibited from imposing higher deductibles or copayments for pregnancy-related treatment. Additionally, coverage of pregnancy-related treatment cannot be limited to married couples.